Welcome, dear traders. It's me, Kate Stichin, and you're watching a recap of the Asian session. The banking crisis still dominates market sentiment. Australian and the New Zealand stocks dropped due to negative signals from Wall Street. Stock markets in Japan and Hong Kong rose significantly. Asian stock markets climbed amid Alibaba news. China's e-commerce giant announced that it would reorganize its businesses into 6 independently run entities. Reportedly, Jack Ma returned to China after lengthy travels abroad. The bigger our business, the more dangerous it becomes for us, China's big companies pinpointed. The tech sector has been under the tight control of the authorities in recent years. Perhaps the return of a billionaire, Jack Ma, who once fell into disgrace of the government, indicates a change in this approach. Some analysts assume that Alibaba's reconstruction meets some regularity requirements. Back in early August 2022, the Securities and Exchange Commission added Alibaba shares to the list of Chinese companies that may face delisting. In a response, Alibaba said that it would work to maintain its New York Stock Exchange listing alongside its Hong Kong listing. After the reorganization, each business group and the company will be able to independently conduct capital raising and IPO when they are ready. In the meantime, it keeps its shares listed in both New York and Hong Kong. Apart from a rise in the shares of tech companies, stocks of commodity firms such as Nippon Steel, Kobe Steel, Enos Holdings and Inpex Corporation advanced in Japan. Toyota Motor, Takeda Pharmaceutical, Oriental Land, Japan Airlines, Fast Retailing and other also scored big gains. However, SoftBank Group shares jumped by 5%, logging the biggest gain. The futures market in the United States also revived. Is the global banking crisis over? Has investor confidence improved after yesterday's speeches in the Senate on the banking problems? U.S. President Joe Biden said that his administration had done everything possible to ease the banking crisis. As we mentioned yesterday, Fed policymaker Michael Barr called the failure of a Silicon Valley bank a textbook case of mismanagement. Therefore, the ongoing crisis results from a managerial failure and can hardly be called a systematic one. Yet Credit Suisse voiced the same reason for its collapse. Analysts were perplexed that all of a sudden there were so many bad bank managers in different countries. Besides, French banks Société Générale and BNP Paribas will face collective fines of more than 1 billion euros as part of the investigation of tax fraud and money laundering. So markets may be again gripped by uncertainty. Moreover, traders are also worried about the prospects for monetary policy. Although the Fed hiked the key rate and Jerome Powell said that the regulator wouldn't ease monetary policy this year, markets are tired of uncertainty. According to the FEDWATCH tool, almost 60% of investors believe that the Fed will leave the interest rate unchanged in May. Markets are slowly but surely calming down amid hopes for the end of the banking crisis. The US dollar tried to consolidate in the morning after a 2-week losing streak. Its status as a safe haven asset has recently declined. However, demand for such assets is now low. The US dollar is weak despite rising yields of US government bonds, and this morning Treasury notes remained unchanged after adding several basis points overnight. The US dollar index rose to 102.60 in the Asian session, after decreasing by almost 1% over the past two sessions. The greenback slightly rebounded, trading in the upward range of 102.40 and 102.70. The yen shed losses in the morning due to a rise in the US dollar and the risk appetite. Its rally on a Tuesday was rather unusual. Yesterday, the dollar-yen pair climbed by 0.5% despite growing yields of US government bonds. Such a strange trajectory occurred because of the end of the fiscal year in Japan on March 31. Until the end of the week, more Japanese companies will convert profits from the US dollar to the yen. So today, tomorrow and the day after tomorrow, the yen is likely to retain an upward movement. On a Wednesday morning, the pair was moving in the range of 130.70 and 132.10 yen per dollar. Commodity currencies also tumbled today. Although jitters over the banking crisis have eased, markets will continue to react sharply to the slightest sign of failures in the financial system. This is why the risk-sensitive Australian dollar showed a mixed dynamic. At first, it climbed, but after the release of CPI data in Australia, it changed its trajectory. The CPI for February rose by 6.8% in annual terms. Inflation in Australia has been falling for the second month in a row and at the mildest pace since June 2022, so the probability of a pause in the tightening cycle has increased even more. The Reserve Bank of Australia meeting will be held next week on April 4. Judging by inflation reports, the regulator will hardly hike the Q rate, and this is rather bearish for the Aussie. The Kiwi dollar pair has already sunk to 0.6655, gradually moving down. It slid into the range of 0.6661 and 0.6714 in the Asian session. Further movements of the pair will depend entirely on the sentiment on the US dollar. The New Zealand dollar also entered the bearish price corridor of 0.6232 and 0.6272. However, unlike the Aussie, the Kiwi may resume growth thanks to a rate hike by the Reserve Bank of New Zealand. The meeting is on tap on April 5, and the regulator is expected to raise the benchmark rate by a quarter point. It may help the Kiwi rise against the US dollar, and the pair closed the Asian session with a fall to 0.6232. And that's all for now. We closely monitor the market situation and provide you with the up-to-date information. Subscribe to our channel and keep your finger on the pulse. And see you soon.